Robinhood's Hood Week is here. 12 days, 3 legendary offers, and unlimited bonus amounts. Earn 3% on IRA transfers with Robinhood Gold, 2% on transfers with at least a $10,000 margin balance, and 1% on brokerage transfers until October 27th. Hood Week ends soon, so visit Robinhood.com/HoodWeek. Investing is risky. Bonus offers subject to terms and conditions. Visit Robinhood.com/HoodWeek for more information. Margin is not suitable for all investors. Robinhood Gold is offered through Robinhood Gold LLC and is a subscription offering services for a fee. Brokerage services offered through Robinhood Financial LLC, member SIPC, a registered broker-dealer.
Good afternoon. Let's do some business. We are doing it live right here, weekdays at 4 in the afternoon. We do more at 4. Get right down to business with the news-driven hour right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. It's Mottek On Money, live on the air on 790 KBC, streaming live online worldwide at kbc.com. And your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. Mixed finish for stocks today with the Dow taking a more than 300-point tumble, snapping a 3-day winning streak and coming off an all-time high. The Dow down 344 points at 42,932. The S&P 500 giving back just about 11 points at 5,854. The Nasdaq, though, managed a closing gain of 50 points, settling at 18,540, getting closer to its all-time high. With the help of NVIDIA, the Magnificent One popping nearly $6 higher today to a record high close of $143 and change. Gold hitting a record high above $2,730 an ounce. Silver also popping to the highest seen in more than 10 years, above $34 an ounce. I'll be joined live later this hour by Barry Stupler, founder and president of Mint State Gold by Stupler & Company, former president of the American Numismatic Association. Cryptos in focus, too, with Bitcoin hovering near $68,000. The bond market also in focus, with Treasuries aggressively selling off today amid concerns about the prospects of a rising U.S. deficit, pushing yields to the highest closing levels we've seen in months. The yield on the 10-year note, for example, suddenly at 4.18%. That's the one that impacts the fixed-rate mortgage rates out there, which have edged higher. The price of oil still in focus, given the increasing tensions in the Middle East. Oil did finish higher today, regaining some of last week's 8% decline after China lowered its benchmark lending rates, among other things. Phillips 66, meanwhile, announcing it's closing its big Los Angeles refinery. This after Governor Newsom added new regulations to the oil industry here in California. Meanwhile, the California Air Resources Board is considering additional taxes on gas to reduce carbon emissions. We'll talk about that later this hour live with the Southern California Republican State Senator Janet Wynn. Shares of Spirit Airlines taking off today. Did you see this? Up nearly about 50%, as a matter of fact. Looks like the struggling low-cost carrier's disclosure, according to MarketWatch, that a deadline to meet requirements and some notes was extended, and it had accessed more liquidity with that liquidity lifeline for the carrier that's been under threat of insolvency. Shares of Spirit's rivals were taking a hit. We'll take a closer look at Spirit and the other airlines coming up as well. Joining us live now is top-ranked money manager Ken Winans, CEO and Chief Investment Officer at Winans Investments, which you can find at winansinvestments.com. Ken Winans, also a market historian, author of numerous books, including Investment Atlas 1 and 2, soon to be Investment Atlas 3, also a Forbes magazine contributor. And you can catch Ken Winans with me on Winning with Winans, Monday evenings at 6 p.m., right here in 790 KABC. Ken Winans, good afternoon, sir.
Hello, Frank, and hey, it's in it. We're in earnings season, the third quarter, and it's going to be a real interesting ride. It really is.
All right, let's take it from the top here. We've seen a nice record run-up since you were last on the show, and a bit of a pullback here for the Dow. The Nasdaq still on a roll here now with NVIDIA leading the charge.
You know, it's really interesting to watch everybody reposition their portfolios right now, because I'm looking on my screen at the number of major companies posting earnings throughout this entire week. With the big one right now, we're waiting on Microsoft. That could set the tone for the entire situation. But then tomorrow, we want to know what's going on with real estate. Pulte Homes reports. So we have what happened with NVIDIA. It's projections on what chips are going to be needed between now and the end of the year. And you also you talked about what's going on with the budget problems in Washington. There's budget problems in Sacramento, which we'll talk about tonight on Winning with Winans. But Frank, we just have to get prepared. October is very volatile. It always has been, and you just have to get your list together and buckle down.
All right. So earnings very much in focus, Ken. Microsoft, you mentioned. What are some of the other names you'll be tracking this week? And what are your thoughts about how this earnings season, we're into the thick of it here now?
Well, I mean, a good case in point. We talked about NVIDIA. Well, a company very closely tied to them is KLA Corporation, KLAC. They're posting numbers on the 23rd. We have Lam Research posting numbers on the 23rd. You want to look at transportation. We have Old Dominion Freight on the 23rd. Financials, Raymond James will post what's going on Wall Street. So this week is going to be a neat cross-section of various industries at various points in time and it's not so much what they posted for the quarter. It's what are they forecasting for the remainder of the year and going right through Q1 next year. I think based on that, as you know, I'm a bull, Frank. I'll admit it, I'm a bull. It has less to do with the outcome of the election, but just simply that you have a lot of money flowing into the U.S. markets. You talked about the problems in China. Everybody knows the U.S. is a good place to be, but you can buy the wrong things at the wrong time and get hammered. You got to be a little careful right now.
And the other factor, we got to mention it certainly, and we're just a couple of weeks away from the presidential election, and big discussions here about how people should position their portfolios or do anything at this point. It was mentioned here on this program last week. According to a J.P. Morgan analysis, markets are pricing in a Trump win and surging GOP sweep probability. What are your thoughts about the markets if it goes either way?
You know, I've talked to a lot of my clients in the last 90 days. I don't care what party they're affiliated with. The talk on taxes, especially as a Californian, comes up all the time. And so I'm asked, as you are as well, what happens if we have these tax cuts expire? My concern is this. Inflation, I think everybody now knows we're not going to get rid of inflation anytime soon. You already rattled off a whole bunch of added cost and all things that are on the California ballot that is going to be an imposed cost to live here. Then you throw on top of it the possibility of a tax increase next year. That does not spell a good year in 2025. So I think it is, although they might not particularly like what's going on with President Trump or whatever else, but they do realize that tax increases at the wrong time could be devastating.
All right, the Fed cut that benchmark rate a half percentage point, and we've seen other rates go nothing but up, with the yield in the 10-year note moving higher, impacting fixed-rate mortgage rates. And what about what's happening with that? And what about the Fed's next move in all this?
You know, I'm going to be a little different than probably anybody else you might have on the show. I actually think the Fed's done for the year. I think when you have this tug-of-war between still pretty high inflation and the fact that the economy is still okay, I think the Fed is going to hold. I think they really will for the remainder of the year. And the fact that rates are backing up tells you that that's what's happening.
Very interesting. So at this point, would you be making any adjustments, portfolio adjustments, as it relates to that 60-40 mix, that traditional portfolio mix, or would you do anything with bonds at this point?
Well, here's the thing. There's actually some interesting income plays that I think people can step into. Here's the problem, though. If you have a high cost of living in California or any other state that has taxes, you have to add that into the inflation picture. So you might feel like you want to go into an income investment, but if you can't get north of 5.5% to 6% or higher, you have to question the meaning of doing it right now. So here's my point. I like preferred stocks right now, especially bank preferreds. They're still paying north of 6, some maybe as high as 7. The fact Zions Bank Corp came out today with good earnings, that I like that sector. I think they'll continue to do well. That's what I would do with the 40% people are talking about.
All right, so the financials have been on a roll lately. Of course, they kicked off earnings season, right, and rallied ever since.
Absolutely. Well, and, Frank, we've talked about the changes in leadership now for probably 6 months. I'm not, it's funny because I've had some audience members email me and ask me, so you think tech is going to go down? No, that's not the point. The point is I think that you have to have other horses lead the stagecoach in order for the market to move forward. And I think financials will be the lead group really throughout the rest of the year.
All right, obviously a nervous time in the Middle East at the moment, and oil back in focus, moving higher. It's been under pressure lately with the Chinese economy in focus there. What about oil here, Ken?
One word to describe oil right now, very seasonal. It's the same with gold and silver. These are seasonal plays. Oil typically backs off this time of year. A lot of it has to do with formulations at refinery levels. But you have to throw into the mix the fact that the West Coast is going to be shutting down more refineries. That's going to have a bearing on what happens to oil prices too, especially, well, certainly refined gas. But no, going forward, I think the focus should be on natural gas, less on crude oil.
And, of course, the oil-sensitive stocks, including the airlines, have been in focus. And this situation with Spirit Airlines, very interesting. The stock popped 53% today. For those that have a stomach for this, the stock was of 78 cents to $2.25. This is the one that's been written up and has been in financial difficulty since the JetBlue merger didn't go through. What about something like this?
You know, Spirit's an interesting play because it almost is a very strange redo of what happened in the 1970s when we had industry consolidation in the airlines prompted by fuel cost and inflation. I think we could have more consolidation in transportation in general. And Frank, let's also say this very quick: Spirit's a major hub out of the LA airports and Nevada. And if the Brightline train is a success, it could hurt their business. That's
very interesting. Well, we have you here. What is the status of that train?
Hey, I just, when I was back in D.C., everybody was talking about it. They almost popped all the champagne. That train is happening. There's no doubt. Everybody on whether it's Nevada or California, everybody agrees it's happening.
All right, Nevada, known as the Silver State. We haven't talked about silver yet, and gold for that matter. Silver on a tear here above $34 an ounce all of a sudden. You know,
silver, and you know, it's funny that a lot of AI people don't realize you need a lot of silver in these new chips, a lot of silver. So silver, being an industrial metal and a jewelry metal, I think it could continue to have a good run. But this time of year, November through January, traditionally strong months for silver and gold. And I think it's safe to say the rallies will continue.
All right, we're going to be talking to a precious metals expert and rare coin expert coming up later this hour. But certainly you're getting... the price of gold is getting a lot of attention here, above $2,730 an ounce, hitting record highs today.
Well, you know, every now and then I get a prediction right, you know, and of course you owe me a nice steak dinner when I am right. I still think gold by $3,000 an ounce by end of January is very possible.
Very interesting. We're on the air live with money manager Ken Winans, and you're also a crypto guy now. You've got your crypto credentials. Haven't talked about crypto yet. We see Bitcoin popping above 68,000 recently, just below that now. What are you seeing in the crypto world here?
Well, you know, I'm a technician, Frank, and so I look at the chart action, I look at price action, and I look at crypto like I do whether it's cocoa, crypto, or it's a stock. And what I see happening right now is volume is coming back into Bitcoin. Bitcoin's chart pattern, not to get too much in the weeds here, you have a situation where it's beginning to build momentum and it's breaking out of the channel it's been in for a good part of this year. I think there is legitimate demand for crypto from certain quarters, and also too, you know, that you do see this decoupling of Bitcoin and Ethereum, Bitcoin being very strong, but also remember, when the NASDAQ's strong, so is Bitcoin, so it's not all that much of a surprise.
Very interesting. We see Ethereum just below 2,700 here. What about the altcoins or meme coins? Do you follow those at all?
A little bit, but you know what? My focus right now is on the stable coins. I know for a fact that there's a whole bunch of firms out there, and especially now it's interesting, Schwab is having their big investment conference next month in San Francisco. And I know, looking at the list of speakers, they got a fair number of crypto experts they're going to be talking to, all these independent advisors. So if you just get a handful of big money management firms to say they need to put this in their portfolios and they're not real happy with the ETFs, that could be a big win for any of the stable coins.
Interesting. And even in the crypto community, there's a difference of opinion on who would be best for crypto as far as the election is concerned. We see one billionaire just giving a lot to the vice president's campaign, and of course others are cheering for President Trump here. What are your thoughts on that one?
You know, the old adage, a fool and his money, and I guess we'll find out who's foolish at the end with whomever wins. But no, it's interesting how you see how very wealthy people have differing political views and how they will support their candidates. But I think at the end of the day, day. It's not about who's president. It's what the regulatory groups are going to do with crypto. And I know the SEC is continuing to be very hesitant about launching new funds until they have a better sense of things.
All right, from crypto to something else in the news. I notice OJ is back in the news. Ken, talking about orange juice futures.
Yeah, Frank, it's interesting when you look, and I talk, I think one of the benefits of me coming on this show and other shows is that I do have a commodity background. And the reality of it is when we talk about, large storms, natural disasters, and you can even throw in the mix climate change, commodities play a role. Florida's orange crop was literally decimated with these two hurricanes. So now unfortunately, I have to say, and I'm an orange juice drinker myself, I think we all better get prepared for much higher OJ prices all through next year.
All right, we'll watch that as well. Anything else on the commodity front that's getting your attention?
It's interesting. There's a lot of seasonality right now, meaning that you're having, there seems to be excesses of supply. People misgauged their commodity demands, and it mainly came out of China. China overestimated a lot of different commodities. I would just simply say this. Where I see strength right now is anything that's sweet. So whether it's cocoa, whether it's coffee, whether it's frozen orange juice or sugar, the world has a sweet tooth, and it's coming back strong.
All right, you're also a wine guy. This is something we'll be talking about some more, I'm sure, in the 6 o'clock hour on Winning with Wine-Ins. But what about wines, the price of wines nowadays?
The wine prices, it's actually interesting because they claim there's a glut of wine hitting the world market. I mean, I talked to a very good friend of mine who was one of the legendary winemakers, and he was telling me right now, Jed, the economy up there, and using his term, sucks. So that's telling me that a lot of the winemakers are trying to figure it out. But I think we'll find during the holidays, wine prices are going to be generally pretty high due to demand.
Very interesting. On the Air Live with Ken Winans. And Ken, let me ask you the big question we ask on this program here, and that is any specific places where you are putting money now and or taking it off the table?
General strategy, I think you want to be fully invested, especially in the equity markets through November, December, and possibly January. But here's my point. If any stock you're in or any fund you're in seems to not do well by the end of this month, I'd get rid of it and rotate into companies that are doing well.
All right, terrific, Ken. Look forward to speaking with you more on Winning with Winans in the 6 o'clock hour here on 790 KBC. We do that every Monday evening here at 6 p.m. But for now, we'd like to thank top-ranked money manager Ken Winans, CEO and Chief Investment Officer at Winans Investments, which you can find at winansinvestments.com. If anyone has any questions for you, Ken, what's the best way to reach you?
Best way to reach me is at winansinvestments.com. Just go on the website, all the information on my company, and you can email me from there.
Terrific, Ken. Thank you very much for joining us live here on Mottek On Money on 790 KBC. Frank Mottek here, folks. Did you know that for more than 10,000 years, gold has been the greatest store of value and considered a safe haven asset to preserve your wealth? Now, with the U.S. debt at more than $35 trillion and climbing, not to mention the Biden administration getting us involved in costly wars, developing the digital dollar, central bank digital currency, and inflation still spiraling, it's more critical now than ever before to safeguard your assets, like your cash savings and retirement accounts, with physical gold. Opening a gold IRA is one of the best ways to secure your wealth and create a stable financial future. Stop worrying about your retirement in the market and cash savings in the bank. Feel confident, prepared, and in control with physical gold and silver. Give Joe Morgan a call now at 1-800-753-8534. Mention Frank Mottek, and you could get $1,000 worth of silver with a qualifying purchase. The number to call now, 1-800-753-8534. Or visit UnitedGoldGroup.com. Mottek On Money continues here in 790 KBC. Good afternoon. The Dow pulling back today by 344 points, selling at 42,932. The S&P 500 down 11 at 5,854. And the NASDAQ of 50 at 18,540. The Dow coming off its all-time high. The S&P 500 slipping a bit today, but the NASDAQ managed a closing gain of 50 points with the help of NVIDIA, which has hit a record high, up nearly $6 today at $143.71. Shares of Apple also moving higher by $1.48 at $236 and change. Microsoft up 62 cents at $418 and change. In the cryptos, we see a Bitcoin down about 100 now, back to 67,648. Ethereum up 4 at 2,679. And Doge is on a roll, up 14 cents, up to 14 cents. Up 56% year-to-date, by the way, for Doge. The price of gold in the spotlight hitting an all-time high today, above $2,730 an ounce. Right now, hovering at around 2,734. I'll be talking gold and silver, which also had a big day. Silver down 6 cents to 34.02 here at the moment, popping above $34 an ounce for the first time in more than 10 years. I'll talk about gold and silver with Barry Stepler coming up live later this hour. The price of oil moving higher during the session today, back above $70 a barrel in New York and above $74 a barrel in London. This as tensions are rising in the Middle East once again. We see that, mentioned OJ, that's been in the news lately on futures markets. We're also taking a look at some of the expectations here for earnings news this week, so we'll be keeping a close watch on that. And we'll be talking more about all of this this evening in the 6 o'clock hour with Ken Winans with Winans Investments. In the 6 o'clock hour, it'll be Winning with Winans right here. Also ahead, coming up in the next half hour, we'll be talking about what's happening here in California with the gas and oil industry. Big changes ahead with the Phillips 66 refinery planning to shut down by next year after Governor Newsom added new regulations here in California. Also, the California Air Resources Board is considering additional taxes on you, the consumer, on gas to reduce carbon emissions here in the state. This could send the price of gas up sharply. We'll talk about that with Southern California Republican State Senator Janet Wynn, who'll be joining me live shortly. All that and more straight ahead, but first, the latest news for you here on 790 KABC. Mottek On Money continues here on 790 KABC. Gold hitting a record high price today. Silver, highest we've seen in more than 10 years. Gold above $2,700 an ounce. Silver above $34 an ounce. Keeping close track of all this is Barry Stepler, founder and president of Mint State Gold by Stepler and Company, former president of the American Numismatic Association, a rare coin expert. Barry Stepler, thank you very much for taking the call. Another big day for gold and silver. Give us your reaction to this big news here today.
Oh, we have lots of happy clients. What can I tell you? I even got my dinner paid about a week ago. I was at a restaurant. I came to ask for the check, and they told me that gentleman over there paid for it, and he was a client that bought gold from me about 10 years ago, and he came by smiling and said, I hope you enjoyed your dinner, because with gold at the time it was over 2,600. He says, I've made a lot of money, and it's because of you. I said, hey, I'll eat dinner here regularly.
Time for another dinner.
It was. Yeah, sounds like it. No, we've got a really runaway gold market here, and there's a lot of factors that are driving this market. Obviously, the wars in Israel and Ukraine and Russia are also big, causing a lot of safe haven buying, and particularly in the Middle East and Asia and European market. Interest rates are dropping both in Europe, Asia, and the United States. That obviously makes gold more desirable. And B of A just came out with a statement talking about the U.S. presidential candidates having policies that are more towards spending and less inclined to do any type of fiscal restraint. That's also helping. You have optimism in China. They're announcing a stimulus program which will stimulate their economy, and we're going right into the area during China where it's the heaviest gold buying. And on top of all this, you have heavy buying from some of the world's largest central banks, plus a lot of the larger financial institutions are now loading up with gold. So we're just seeing all the major factors coming together and pushing this market up. It's just the way it's going. I mean, it's one step after the other. We hit 27.41 in European markets last night, and right now is trading right about 27.22. But if it stays above 27 for the next few days, we're definitely on the pace to see 28, probably within a month. So it's just the buying is just so intense.
Wow, that's an exciting time for you. And, of course, when it hits all-time highs, that's when people are most interested in it. Are people going for coins or bars? What are the choices nowadays?
Well, the best items to invest in are gold bullion coins, the American Eagle, the American Buffalo, the Canadian Maple Leaf. All these trade at a very small premium over the actual gold price, and they're very easy to sell. They have excellent liquidity as opposed to bars, which aren't necessarily as liquid as you'd like them to be, because there's always a concern about counterfeit bars. But it's very easy to determine whether a U.S. coin or a Canadian coin is counterfeit. So those trade very actively. People come in, they walk out with money. That's how quickly we can do the trade. And that's something that I've had couple of questions about that. When gold broke 2,500, I had a number of calls from clients who have been owning gold for 15, 20, 30 years. And they said, is it time to sell? And I have a standard answer for that. If you're over 40% of your assets in gold, liquid assets, then you might want to lighten up a little bit. But other than that, and other than having a good use for the money, just hold on. And that's what most of our clients are doing. They're just holding on and enjoying the ride. So I think the long term for gold has never looked better. I now looking for 3,000 by the end of the year, 2,800 by next month, and 3,000 by the end of the year. And every time we're on this show, you ask me for what I think gold's going to do, and it keeps hitting that level and going higher. So I got to do the show more often.
Isn't that something? Yeah, we're on your live with Barry Stepler, founder and president of Mint State Gold by Stepler and Company. Of course, Barry Stepler, we were talking during the financial crisis days, back in those days when gold made a move back above 1,000 and then got close to 2,000 during the course of the last 15 years or so, and now, as you say, above 2,700. And the question that came up during the financial crisis when there was concerns about the global economy was, if gold went to 5,000, would you sell? You know, what if we saw a scenario like that? What would that tell us about the dollar and currencies and so forth? And the question would be, would you sell at that price?
Well, it's this way: if a gallon of milk at that time is $100 because of inflationary cycles, you might want to rethink it. And again, if you don't need to sell have a good purpose for the money, then hold on. It's most of my Asian clients are accumulating gold for literally hundreds of years, and it's part of their family assets, and they just hold on to them, and they never ask about selling. They just know that this is part of their assets, it's part of their family's wealth. You know, at the same time, we need to talk very briefly about silver. I mean, I'm impressed with gold going up 32% this year, but silver is up 39% this year. And we have a lot of drivers for silver. A lot of people who don't want to buy gold or do want to hold gold at these levels come in and buy silver. Silver is still trading at about 60% of its all-time high. So there's plenty of room for silver to move too. So it's something of a way to diversify your precious metal holdings. If you're like to cash in some gold, then pick up some silver. I mean, it's a good trade in terms of having a diversification.
All right, silver now above $34 an ounce, the high it's been in about a dozen years. Where do you see silver go from here?
If gold continues to go like this, it's basically gold's the leader. If gold continues to go like this, I think you'll see silver 40 by early next year, because the amount of silver out there right now seems to be dwindling, and the amount of buyers coming online, particularly China. China for years was only primarily gold buyers. Now all of a sudden you're seeing a lot of silver buying out of the Chinese economy, and they're major spenders.
All right, in the past, we've seen platinum have been more than gold. In fact, it was double gold for a while. Platinum, though, is well below the price of gold at 1,015 here. As I'm looking here briefly on the screen, and we see platinum, by the way, has barely budged this year to date, up about 2%. What about platinum here?
I just continue do not like it. I mean, it just doesn't have the momentum or the desirability. No central bank that I know, other than the Russians, keep platinum as part of their assets. So the buying isn't there, and although obviously a lot of platinum is used in solar technology, but it's still the demand doesn't. Is not going to push up platinum. I mean, it could maybe get to 1,100, but I think that would be stretching. It hasn't been at that level in a while, and I just can't recommend it right now.
All right, and then there's palladium. That's the other one that is mentioned as well.
Same thing. I don't see any heavy demand in palladium or platinum. The desirability right now and the momentum is definitely with gold and silver. So I would probably hold off. At some point in the future, it may change, but right now, for at least the last couple of years, I've been very negative on platinum and palladium, and it is. I've been pretty right on that in terms of watching. It's not doing much. It rallies and then it goes back to 900, then it goes back to 1050, then back to 900, and if its gold sells off, gets down to around 2700, shows some support, it's a good bet that platinum will break down below $1,000 again.
All right.
It just doesn't have the demand.
As the former president of the American Numismatic Association, you keep a close watch on collectible coins and so forth. Are there any new offerings that people are excited about as far as gold and silver coins these days?
There's some stuff that the Mint's coming out with that's for collectors, not necessarily investors, but people that collect. You might want to check the usmint.org website. They have a couple of medallions that are really beautiful coming out, and I'm going to buy one or two just for the point of collecting them, but they're not something I would want to put any serious money into. If you're looking to own gold or silver right now, buy the investment quality material, the gold eagles, the silver eagles, the gold buffaloes, the silver trade unit buffaloes. Those trade very actively. They're easy to liquidate, and they don't have a large spread between the bid and the ask, which makes it very desirable for investors.
All right, Barry, thank you very much. And your website, mintstategold.com. That is Barry Stupler, founder and president of Mint State Gold by Stupler & Company. Barry, thank you very much for joining us live here this afternoon.
And go Dodgers.
Yeah, let's not forget that. Absolutely. Go Dodgers. And let's get out to that freeway now here on 790 KBC. Mottek On Money continues here on 790 KBC. Give me 150 on pump number 2. Might be saying that soon. Thanks or no thanks to what's happening in Sacramento. I don't know if you heard the big news, but a major refinery is closing here in Southern California days after Governor Newsom signed a bill that adds new regulations to the gas and oil industry here in California. Also, the California Air Resources Board is now considering additional taxes, if you can believe it, on gas here in California to reduce carbon emissions. Joining us live now, Southern California Republican State Senator Janet Nguyen. Senator, thank you very much for coming to the line. Take it from the top and tell us what we need to know about what's happening there in Sacramento impacting gas prices here in California.
Hi, Frank. It's good to be back. Thank you for having me. Unfortunately, a lot has happened since the last time we talked, and none of it, I'm sorry, is good. You may have heard, as you mentioned, there was a special session recently. This is because our wonderful governor, Governor Newsom, pushed our leaders to pass his pet bill requiring all oil refineries to store extra gasoline to avoid price spikes, according to the governor. Obviously, he could have done it at this last session. He chose not to. He could have done it next session. He chose not to, but he dragged all of us up to Sacramento for one day and at a great cost to taxpayers. So the price spikes happen for several reasons, but often because of refineries go offline for maintenance. The theory is that these reserves could be released to stabilize prices. Newsom claims it will keep prices from going up. However, this bill creates an ongoing artificial storage. Say you have 100 gallons, a few, but you're ordered to put away 20 gallons in reserve. That means you only have 80 gallons to use or to sell. Now we have to import the other 20 gallons for us to use, and it'll be at a higher price. As you know, I've been sounding alarm on the high gas prices and the needless taxes for 8 years in the state legislature. I've seen so many bad bills, but nothing more ridiculous than this one. And what's really unfortunate, most people aren't hearing it since the governor passed it and we passed, the legislature passed it, a bipartisan. It was a partisan vote line. Now that the governor signed it, expert has said that this bill will ultimately cost an extra 30 cents a gallon. And it can also cost oil companies or their refineries to leave California, which, of course, then would cost more. And in the last couple of weeks, you've heard, after the governor signed the bill, Phillips 66 just announced that it's shutting down its Los Angeles refinery, operating since 1919. And earlier this year, Chevron was founded in California in 1879, left for Texas. We have 1/5 the refineries from a few decades ago. Obviously, what does that mean for you, me, and everybody else? It's just increased prices because we have to now import fuel for Californians to use. Gas-powered trucks, delivery products to every store you and I shopped and everybody else. So when we go to the store, we have trucks deliver those groceries or those products that we buy, and we all use our cars to go to work, school, medical office, doctor's office, or to to the grocery stores. So, I know you're a great journalist, Frank, and so let me know when you hear of the next refinery that's leaving California, because I'm not surprised that there'll be more and more shutting down. Our governors have created the most hostile environment in the nation for oil producers, quite frankly, for businesses in general.
On the air live with Southern California Republican State Senator Janet Wynn. Thanks for laying it out and laying it on thick here on what's really happening here in California as it relates to gas and oil prices, and we do appreciate it. Now, for decades that I've been here, there's always been talk, we need to build more oil refineries to get that price down. We need to build more refineries. If anything, just the opposite is happening. There's probably never going to be another new refinery here, right, with what we're seeing at the moment?
It's impossible to have a new refinery. Right now, there's over 1,000 permits that needs to go online. It's not even a new refinery. They can't even get the governor to sign off on it. So forget about new refineries in California. We just want the current permits, the application to get through the process and to actually get up and running, and that's not even happening. It's been a decade now. So it's going to get worse. I don't see the light at the end of the tunnel at all for Californians. And Frank, as you know, CARB itself is now looking at taxing 47 cents next year. And they're meeting in November to pass this on to all of us, but yet they have not been transparent at all. So we're talking about that 30 cents is separate from the 47 cents for CARB.
Yeah.
So it's not going to get any better for us.
Right. We did see that analysis by the Western States Petroleum Association that the latest regulations just signed into law by Governor Newsom will raise gas prices by 30 cents a gallon. And then we have what you just mentioned, this California Air Resources Board considering additional taxes on gas, and that could send the price up by about nearly 50 cents for next year and even higher the following year. This will, of course, make California by far the most expensive state for gasoline. We're already paying, in most cases, more than they're paying in Hawaii, by the way, which is in the middle of the Pacific Ocean.
Yeah, Hawaii imports everything, including their gas and their oil. So right now, we are the most expensive per gallon in the nation, beating Hawaii. We're going to even top that. We're going to top ourselves.
Isn't that something? And then in the meantime, we're swimming in oil. 100 years ago, California accounted for 25% of the world's oil production, by the way. And if you go to the La Brea tar pits right now on Wilshire Boulevard there at Cursan, you'll see a big pit there of oil, the tar pit. We're swimming in oil here and paying the highest prices in the United States. Senator, thank you very much for joining us live here. We look forward to staying in touch with you on this important issue. And, of course, we'll see what the California Air Resources Board decides, which will impact everyone's pocketbook. Once again, Southern California Republican State Senator Janet Wynn, thank you very much for being with us here today.
Thank you, Frank.
Coming up next, stay tuned for the 790 KBC News Blitz with Randy Wang, followed at 6 by Winning with Winans with Ken Winans and yours truly. This is Mottek On Money on 790 KBC.
Check out the podcast that inspired Taylor Sheridan's latest series, Landman.
There's a stretch of road in an oil-rich region of West Texas. This region of West Texas, known as the Permian Basin, is in the midst of the biggest oil boom in history. This is a story of roughnecks, billionaire wildcatters, and wannabe dreamers. My name is Christian Wallace. From Texas Monthly and Imperative Entertainment, this is Boomtown.
Boomtown, wherever you listen.